$3,045 an ounce. It hit a high of $3,055. It's up over $1,000 an ounce since we made that trend forecast that this would be a golden year for gold. Oil prices are going up, and you know what we say was happening with oil prices. When Brent crude, if Israel and the United States attack Iran, Brent crude is going to go to $120 plus a barrel, and that's going to crash the equity markets and the global economy, which are already in trouble. So,
in today's news recap, silver price remains below $34 after Fed rate decision. Silver price holds on to gains after a previous session of losses, trading around $33.80 per troy ounce during Asian hours on Thursday. However, the non-interest-bearing metal faces pressure following the Federal Reserve's interest rate decision. As widely expected, the Fed maintained the federal funds rate at 4.25% to 4.5% during its March meeting, but reaffirmed its outlook for 2 rate cuts later this year. This stance aligns with forecasts of slower GDP growth and higher unemployment, counterbalancing concerns over rising inflation in the United States, potentially driven by aggressive tariffs imposed by President Donald Trump. Silver, a non-yielding asset, may have found support as U.S. Treasury yields declined, with the 2-year yield at 3.97% and the 10-year yield at 4.24%. Meanwhile, bonds gained traction following the Fed's decision to slow the pace of quantitative tightening, citing concerns over reduced liquidity and potential risks tied to government debt limits. Silver lease rates have surged due to shrinking stockpiles, particularly in London, as silver flows toward the U.S. to capitalize on higher prices. Banks and traders lease silver to ensure short-term liquidity for trading or operational needs. This shift has widened price gaps between major markets, with spot silver up 17% this year, outperforming other commodities. Additionally, physical silver transfers from Canada and Mexico are strained by tariffs, further tightening supply. Growing fears of a silver squeeze could disrupt trade for months. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes.
What a freak show. What a freak show in a country near you. Anyway, speaking of the freak show, hey, how about the markets today? Well, they were down, not big time, but not a happy day. Let's see, the S&P, it was only down 0.22%, NASDAQ 0.33%, and boop, the Dow just slipped a little bit, 11.31 points. So yesterday it went up because of Fed heads Powell saying that, you know, maybe this, maybe that, maybe that, maybe this, maybe this, maybe that, maybe that, maybe this, maybe that. Oh, you hear Trump? This guy, I mean, I know you Trump lovers, the fucking guy's full of shit, all right? Let's go back. He says, you know, when I come in, I'm going to make sure they lower interest rates. And then the Fed held interest rates. And then he said, well, I agree with them. They should hold interest rates. And now they're holding interest rates, not lowering them. And he said, they should lower interest rates. Hey, got some. Why don't you say what you're going to say and make it, you know, the truth? And again, I'm going to show you what bullshit this guy's spewing out when we get to the other issues here. So what happened today? They're also looking at the move comes a day after the latest Federal Reserve meeting, in which the central bank forecasts 2 interest rate cuts this year. When the markets go down and the dot-com bust hits, they're going to lower interest rates more. Guaranteed. Trump did it before. He will do it again. Again, he did in 2018 when the Dow had its worst December since the Great Depression. And he forced Fed head then Powell, same jerk now, to lower interest rates, and Powell did it in January. And what else? So the S&P was in correction territory a couple of days ago. It was down 10% from its high. Now it's down only 8%. But the NASDAQ's still in correction territory. And what else? Bitcoin, it's hanging around that $84,500 an ounce. Up, down, up. Again, gold is taking the shine out of Bitcoin. I want to make this really clear. You're looking at gold when we went on the air over here. It's what?
In today's news recap, gold slightly up after hitting record high overnight. Gold prices are up a bit in midday U.S. trading Thursday after overnight hitting another record high. Silver futures are modestly down. The precious metals bulls got through some central bank decisions this week, relatively unscathed, which gives them fresh confidence. April gold was last up $5 at $3,466. May silver prices were last down 21 cents at $33.99. The marketplace has digested the FOMC meeting that ended Wednesday afternoon with no change in U.S. interest rates. However, the Fed did slow down its runoff of its securities holdings, which is a slightly dovish lean. Barron's reported Fed Chair Jay Powell did a superb job of threading the needle. He said the U.S. economy is still solid, but added inflation is creeping up a bit, and there are heightened economic uncertainties. At present, the U.S. stock indexes saw their biggest FOMC day gains since the middle of last year. And Powell also managed to not draw the ire of President Trump, at least not yet. Also, the Bank of England and Sweden's Riksbank left their monetary policies unchanged today as expected. The key outside markets today see the U.S. dollar index higher. NYMEX crude oil futures prices are higher and trading around $68.25 a barrel. The yield on the benchmark 10-year U.S. Treasury note is presently around 4.2%. Technically, April gold futures bulls have the strong overall near-term technical advantage. Bulls' next upside price objective is to produce a close above solid resistance at $3,100. Bears' next near-term downside price objective is pushing futures prices below solid technical support at $2,900. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Fed's economic outlook dims. Yeah, no shit. Oh, you know what they're talking about? Stagflation. No. Dragflation. No, I'm not talking about the queer stuff. Not that kind of drag. Drag means like the economy goes down and inflation goes up. Dragflation, we're the only ones saying it. U.S. shoppers tighten belts. Financial Times. Footfalls at U.S. stores fell 4.3%. year on year early this month, according to Retail Next. Yep. And last Friday, the University of Michigan's consumer sentiment recorded its third consecutive monthly drop, the lowest reading since the COVID war, November 2022. Got it? This thing's going down. When all else fails, they take you to war. Yep. And we keep going on. It's in your Trends Journal. The articles are there. General Mills reduces outlook as sales soften. No shit. And the Chinese, of course, Tesla stocks are going way down. People are going after the cat. But even beyond that, BYD's 5-minute charging threatens to leave Western car brands in slow lane. Yep. That's Financial Times. You could now electrify your car, reduce it, the time it takes to pump gas into a car. Again, the Chinese, I'm mentioning this because we said there's going to be a dot-com bust and the Chinese are going to lead the AI world that I hate. That's the reality that's going to be. And it's going to cause the dot-com bust 2.0, which is going to crash the markets. Again, I don't carry a cell phone. I hate to say AI shit, but it's the future. It's the future. And they're going to lead in it again. 70% almost of the 18-year-olds go to college. It was only 10% before Bill Clinton brought him into the World Trade Organization in 2020. I'm showing you the stupid fucking article from the toilet paper record over here. Best tech for babies. Everything's going tech, AI, and they're going to lead in it, just like they're leading in this. Gabish? PepsiCo buys Puppy for nearly $2 billion. Yeah, good going, yeah. One after another. One after another, buying up everything they can. Yep. Google uses $32 billion to purchase a startup. Wonder buys Tastemade. Kraken nears deal for future platform. Alliance, BlackRock, and Group to buy insurer Viridium for $3.9 billion. Advanced Instruments to buy Nova Biomedical for $2 billion. I'm mentioning this because each week in your Trends Journal, we show how the bigs are getting bigger. We also show the job losses and businesses going out of business, not what you're getting in the mainstream media. This is serious. And when I say things are bad, what's this country, Indonesia, where they got about 150 million people over there? Stocks tumble on concerns over weakening consumer spending. Old news for Trends Journal subscribers. It's in your Trends Journal last week. And again, it's going to get worse.
What's your take on Celente's new outlook? Do you think $3,000 gold is realistic this month, or are there more hurdles ahead? Will central banks continue to gobble up all the gold? It's funny that Gerald Celente has shifted his forecast after being bearish for like 2 weeks, becoming bullish on gold as he sees current market conditions driving prices higher. Share your thoughts and price predictions in the comments. Let's see how this plays out in the coming weeks. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.